All right. Welcome back. Here's Blue Pips Effects. Bring you another banger for today's execution here, man. Yeah. Please like, as this is my first video on YouTube, and also this is the first time I'm opening the channel. The YouTube channel is called the Blue Max Effect Pips. Please, guys, subscribe for your guy here, man. Let's moving on. Thumb testing. Yeah. I think that's better. So, guys, we'll do a trade recap. We'll do a trade recap. Guys. We'll do a trade recap of last week trades that we took. This one we took on Friday. We took how many trades on Friday with my group. I'll do a trade recap on the trades that we took on Friday. So basically, my strategy involves basically my winning goal strategy guys, it's basically the SMC, and so guys, let me put in caps. The SMC plus no, it's advanced SMC, plus MSNR. So those are basically the strategy that I use on trading gold. You see, this is the strategy that I use in trading gold. So basically, SMC will be looking at basically on the SMC strategy. Basically, on the SMC strategy, we'll look at the breakout structure. Also, we'll trade using the order flow. Also look at liquidity concept. Basically, these are the three things that I look at the SMC strategy based on what I use in making the entries, right? Yeah. So we move into the advanced SMC. So in SMC right now, MS and R. In this strategy, we look at how we do trade using the key levels from the key levels is on the higher time frame. Like the 1 day or the 4 hour. Yeah, and after looking at the key levels, this is whereby we'll find the OCL, open close candle. So it's basically the open close candle. Yeah. What again we'll look at the OCL. Then we'll look at the liquidity sweep. Or the inducement. To look at the OCL and look at the breakout or the SMC. Look at the candle breakout, or basically the candle breakout. Mostly I use it at the lower time frame or the market shift structure. So, market shift. Sorry guys. Basically it's on the lower time frame, LTF. Look at the 15-minute or the 5-minute, but basically maybe when I'm scalping at times I use the 1 minute, but it's not advisable. But at some point, if you get a confirmation, you can use it. The 1 minute. So guys, this is basically all the rules that I use. So this is how my strategy always works. So first of all, I determine the trend, but always remember that the trend is always the key thing that drives the market and for our better entries. You know what, talking my people? Alright. Yeah guys, I'll look into it. So basically what I looked on Friday, this is a trade recap, my guys. This is not something that you usually call the backtesting thing, or maybe just other kind of stuff. Yeah. So these are the trades that they took on Friday. So you notice that on Thursday night, the market opened with a gap towards the upside, and it retraced the gap, because this gap always shows, this gap here always shows the unfilled orders that the large institution left behind to move to gain the momentum to move the market towards the bullish trend. And you know, in gold the trend is always bullish. If if we look from the daily, okay, my charts now. Yeah, look how the trend is kind of bullish. Let me look for another chart. Let me add USD. Use this one. Look at from the weekly, the move has been on the bullish since the start of the 0, 400, 800, 1200, 1600. This is what I'm talking about. From the 0, 1200, 1600, 2800, 4000, up right now it's kind of in 4980, approaching 5000 level. Yep. So you can see the trend's bullish, yes. From the daily also it's kind of bullish, and also from the 4 hour it's bullish, but these are key levels that is highlighted. Possible order blocks that hasn't been filled yet. Yeah, this is what always the market does. Alright, my people, alright. So you can see the market move like on the higher high, higher low, higher high, higher low, higher high, higher low, higher high. And I'm expecting something like this, then like this, towards the upwards. Yeah. So basically the market is moving in an upward direction. Those who do MCMC can say that the market is kinda breaking structure. Sorry guys. This thing is kinda break of structure. BRS. Also this one. So this one, you can put it here. This is also break of structure. This one also is a break of structure. Sorry guys for my drawing. You know, I'm kind of not good in drawing, but this one is a break of structure. Also, this one also is a break of structure at this point. Yeah. So this is a break of structure. So after every impulsive move, there's also called a retracement. After every impulsive move, there's a retracement. So this one is the impulsive move. So the trend continues going up, down, up, down, up, down. Not unless maybe you see the market goes up, closing below the recent high low like this. So this is basically the downtrend. So when the market changes direction, closing below this high low, it means that the market now has change shift, or the market has, sorry guys, the market now has changed character. So it's called the market shift of change, the market change of character. Yeah, this is basically the SMC strategy. Let me just remove all the drawings. Yeah, and leave the market to be clean like that. So this is the 4 hour. 4 hour, you can see the market is on uptrend. You can see there's a favorable gap here, there's a favorable gap here, there's a favorable gap here. So you can see there's a favorable gap here, this point. Also a favorable gap here. Also a favorable gap here, but this one was retested. The orders were filled. So let me tell you the secret of trading gold. Gold always respect favorable gaps, even if the favorable gap is on the higher time frame, it cannot respect all the favorable gap. But if you look deeply on the lower time frame, like the 5 minute or the 15 minute, you'll see that most favorable gap, gold respects the fair value gap. Why? Because the fair value gaps because the fair value gaps, this simply means that as these specific zones, the blue zones here, you see that you see that the market, sorry guys, you see that this is a fair value gap. What's a fair value? A fair value gap is a price imbalance. It's a price imbalance on a chart, where price moves so fast, what it leaves little or no trading activity in a range. What it leaves little or no trading activity in a range. Yeah. So basically, fair value gap, this is a point where the large institutions leave their unfinished orders. So it's a point where whereby the large institution stores or leaves their orders that are not yet filled. Yeah. So you'll find that when the price leaves a range, it will retrace the range. You'll find that the retracement of the range, either the favorable or the order flow, and price pumps downside. Yeah, that's basically what favorable gap is. So if you look at the market, we see that the market has a lot of imbalances. So for a favorable gap to be invalid, the market tends to fill the favorable gap at the 15% of its encroachment. This is a zone. You can see that at this zone the market almost cover up the 15-point range of that zone. Yeah. So basically this is how the market tends to move. So you see that the market is on an uptrend, and also if you look at the 2-hour, see there's a lot of order block. So let me clear this one. Now let me just clear all the drawings. I like this. So those who use SMC, you'll find that so we'll only focus on the recent market move from here to here, from this point to this point, right? Yeah. Okay. So you find that the market broke structure at this point. So that's a break of structure. ERS. And clone it. Clone it again. Clone it again. Yeah. It left behind the order block. This one was covered. This one's a break of structure, but this one is just a liquidity. But at this point, break of structure, and also this point, the price also broke structure, left behind the order block. So you'll see that the market pumped, leaving out the large favorable gap here, 1, 2, 3, 4, 5, 6. But at this point, the market traces this favorable gap, causing a break of structure here. But those who trade MSNR will see that there is an order block at this zone. This is the point whereby the market reacted from. Yeah. So the price went up, broke structure. But me personally, I'm thinking that if next week on Monday the price might retrace a bit before going up to fill in this favorable gap, if in case it goes down. So we just switch to 1 hour. We switch to 1 hour so that at this point we see it clearly. So you see that after every favorable gap there must be an inducement. This is where you'll find the liquidity resting. So after the super liquidity, action of the order block, see there's an impulsive move. So at this point I can also see an order block, and also there's a liquidity. This one is a liquidity. So the price might tap into that zone and then pump to the upwards. So this is how the SMC trade usually works out. So I'm anticipating a bearish to the downside before the move occurs at this point here. Either this point here, but this one it has no liquidity. But here you can see, let me show you. You can see there's a fair value gap resting at this point, and also there's a fair value gap resting. But this point, there's no liquidity. There's no liquidity resting at this point. But also, the market at this point can retrace from here, and go to the upwards. Let me show you. Those who trade this MS and R can tell you. You'll see that this one is a liquidity, and also there's a fair value gap at this point. And also you'll see that these may act as support, meaning as the break and retest strategy. So the price might react from this zone here. Yeah, from this zone here. As I see, liquidity react from this zone, then pump to the upwards. Yeah, this is basically what I'm looking at next week, Monday. So at 45.84 or maybe 45.18, 48.15. Sorry about that. Or at 47.88, the price might react at those points. So those who scalp, now let me go to the scalping mode. The strategy that I use in these impulsive moves. So look at the 30 minutes. So after the market broke structure, this point, this 15 more. So me, I personally use 15 minutes. You can see the market at this point. This one is the field one. At this point, you can see the small fair value gap. The scalp is for a small fair value gap. The market retraced at this point and move to the upwards. So, but basically, you know, gold, how it usually reacts. Gold sometimes never have a long retracement, only if it crashes. Yeah, only if it crashes. So me personally, I was anticipating an entry at this point before pumping to the upside. But if you look at the 5 minute, no, if you look, okay, let's start at 15 minute. If you look at the 15 minute, you'll see that the market reacted at this range. This was an LCL, the open close candlestick. So the market retracted before going up, but it swept liquidity. It swept the previous liquidity here. It swept the previous liquidity before pumping upwards. Before going upwards. So me basically what I saw that made me took this trade here, you see that the market changed character. but there was a liquidity sweep at this point. Market sweep liquidity here. So this one is an apex. It's called apex on the MSNR. So if you see to the line chart, you see that the market changed the cost change of character at this point and acted off to this liquidity. So there's also called something called QML. It's called the Quasimodo level, or the shoulder, the head and shoulder. Okay, this basically works here. You'll find something like this. Let me just illustrate. Find market like this. You see a liquidity forming there. Then the market will trace from this and pump to the up. So it will be something like this. So this level, I usually call it the QML, the Quasimodo level, but it must have a liquidity this point and also a favor lookup at this point. It must have a liquidity to be in order for it to be valid. So you might find that there is an QML, but there's no liquidity resting at this point. So you'll find that the price will just react at the order block at this zone here with a wick. So you'll find that the price react with a wick before pumping to the upwards. Yeah, that's how basically I usually trade. So you'll see the QML, and there's a liquidity resting at this point. You see how this thing is so easy. There's a liquidity resting at this point. There's a liquidity. So I personally took the trade from here. I was targeting at this point here. Stop loss below this low. Yeah. This is how MSNR looks. So you'll first see the reaction. If you look at 30 minutes, you'll see these are key level. This one is a key level. This one is a key level, and it swept liquidity. So those who use ICT can tell you that this is called the turtle soup. This point, let me enlarge it. This is called a turtle soup. For a turtle soup, you'll see the reaction, then the reaction at the order block here before pumping into the upside. So me personally, I was targeting at this point. This was my target. Yeah, that's how I managed to take 3 RR. So if you switch to the line chart will show you all the progress. You see the change of character, the retracement of the super liquidity, and the trend to the upside. So those guys who use ICT. So me personally, I use the SMC and advanced MSNR. That's how I managed to take this trade from this point up to this point. So again, for the re-entry, you see that the price broke structure to the upside, causing a break of structure. So after the break of structure, you see that this price has a fair value gap. See that this price has a fair value gap, this point here. This price has a fair value gap at this point here. So remember that price usually respects the fair value gap, but personally, after the retracement, price usually respects the fair value gap at the lower time frame. You get it? So after you could see the fair value gap, and also you'll see there's a liquidity resting below it. Just remove it. So you'll see there's a liquidity resting below it here. After the liquidity, you'll see there's an order block resting at this place here. Why? You can see there's three things. First of all, fair value gap. Second of all, there's a liquidity sweep, and also there's a retracement at the order block here before the price pumping to the upside. So I sent this re-entry to the group again. Are you right, my guys? Yeah. I sent the re-entry to the group, and majority took the entry. You can also see this one also, guys. See how this analysis at the lower time frame is so easy. You can also see there's a fair value gap here, there's a fair value gap here, and also the other thing, there's a liquidity at this zone here. So what price will do, there's also an order block at this point here. There's an order block here. Same again, just let me tell you guys, you know, at the low time frame, if you see a favorable gap, gold will never leave that favorable gap in lower time frame. But at the high time frame, you'll see that the fundamentals are taking over the technology, because the entry will find that gold leaves too much unfilled fair value gaps, but there's no retracement. So those who day trade and also swing trade, but more especially those who swing trade are the ones, sorry guys, are the ones who are enjoying the move of the market, because they just held trades for more than days. Yeah, for more than days. So you look at if you look at the 15-minute, you see that the price broke structure to the upward, but it reacted off from this OCL. Oh, sorry guys, sorry. OCL before going upwards. So come straight to 5 minutes. You see that there was a fair value gap at that point, and also there's a liquidity. If there's no liquidity at this area, if there's no liquidity at this point, you'll see that the market will form a liquidity. Sweep the liquidity before pumping upwards. So at the 5 minute, you see that it tracked off a fair value gap, and also in 15-minute, you will see at that zone there is a fair value gap. There's a fair value gap at this zone. and also the price broke out. So this is a zone of key level. All this is a zone of key level here. There's a rejection here, came back, retraced, and pumping to the upside. Yeah, guys, so basically what I'm looking at for next week trade, from actually tomorrow, you'll see that for tomorrow's trade, you'll see that there's an OCL at this point here. And also there's a liquidity resting here. There's an inducement. So you'll see that at the lower time frame, the price change character. And then this is the buy side liquidity. So you see a line chart, you'll see breakout, the market breakout, BRKT, this is the market breakout. You see it forming a double, it's called a double top that caused the change of character at that point. So what I'm expecting price either to break the buy side liquidity, and come back and trace this point here before pumping to the upward. So I might be waiting a retrace. But there's an order block here also, so there is an decisional order block, so liquidity. So for those who scalp, maybe to the upside, targeting maybe the 5,000 key level at this point here, and yep, that's my outlook for next week's trade. Thank you guys for watching, and guys, in my YouTube channel also, this is my first video I'm posting on my YouTube channel. Guys, please, for your guy now, I started it all, so please subscribe guys, like, comment and share. Thank you guys, see you another time.